Can you believe the incredible history behind video game store GameStop? Now, GameStop's been in the news once again because of its rapid stock movement, all because of Roaring Kitty live streaming on YouTube and posting once again on Reddit. The stock has been the main focus of financial experts all over due to the pumping and dumping in the recent weeks and over the last few years. In the past 5 years, GameStop has been in the news more than most people would expect. If you recall, several years ago, the stock was pumped due to heavy shorting and the support of Wall Street bets. The stock and the company have become a rally cry on social media and all over. People want GameStop. They want to save the company and they want to pump the stock price up. It makes financial experts angry, and that's why it's become so popular. So let us take a deep dive throughout the video game history of GameStop. GameStop has not always been called GameStop. If you're a 90s kid, you probably vividly recall the video game store called Babbage's. Babbage's was founded in Dallas, Texas, originally as a software retail store. The company began by two Harvard Business School classmates, James McCurry and Gary Kusin. They would end up getting the name of the store from the mathematician Charles Babbage. The first store would open in Dallas North Park Center. The store would have early success due to the backing from famous billionaire investor Ross Perot. Perot was the one who called up Dallas's North Park Center and told them that there would be a new electronics store opening there. Perot's business expertise would help the organization grow. He would push the concept of not opening up many stores, rather open up one main store that could prove that they could do successful business. He would also offer to invest in the company a $3 million line of credit in exchange for 1/3 ownership. Perot helped them understand that building a business takes a lot of hard work and understanding the customer. They focused on being consumer friendly and not technical. What set Babbage's apart was the fact that they were one of the first companies to really sell entertainment-focused software. This would be software for video games and computer systems. Like many companies early on, they would struggle in their first year, losing $560,000. However, in their second year, they would break even, just barely. But this would lead to them expanding. They would go about that expansion plan that they originally wanted to go with. They saw sales increasing and knew that this was an opportunity. Through the use of private stock, they would expand to well over 50 stores by 1987. In 1987, they would begin to shift their focus to selling on the side of video games. They began selling Nintendo games and accompanying software in their stores, which would help them become a focused video game store company. This would lead to their first major profitable year. Because of their newfound success through the video game market, this would lead to them deciding to go public. Rather than getting funding through more private investment, they decided to have an IPO. Babbage's would offer 30% equity in the company for $20 million, opening around $13 a share. After the public offering, Perot would sell his portion in the company. The IPO would allow Babbage's to grow further, accelerating their expansion program with opening up 50 new stores and 108 retail outlets in the first year after the IPO. Because of this heavy expansion, revenues doubled to $58 million, causing their earnings to skyrocket. The early days of Babbage's was very successful. Because of their focus on the video game market in the 90s, Babbage's would decide to merge with Software Etc. Software Etc. had been in existence since 1984. Originally, they were just sections within the B. Dalton Stores, which was an entity of the Dayton-Hudson Corporation. However, the B. Dalton Stores would be sold off to Barnes & Noble in 1986, leaving Software Etc. as a standalone store in 1987. The store would have very quick expansion throughout the end of the 80s, focusing on higher-end PC and Mac software applications. But by the 1990s, they decided to expand into the video game market, which was perfect timing for the company. Revenues would skyrocket throughout the 90s with an overall 20% increase in same-store sales, and revenues would increase substantially. By 1992, they had around 230 stores in 37 states, which would lead them to have their own IPO of 2.3 million shares at $11 per share. In 1994, Babbage's and Software Etc. would merge, creating the new NeoStar Retail Group. The merger would take place through a stock swap. Essentially, the two businesses would still be separate entities and they would work as subsidiaries of this new organization that had been created. Even though both organizations had success as standalones, they would begin to struggle by the mid-90s, causing some shakeups in the upper management, and by 1996, the two would have officially merged into one single organization, and it would be a time period of great struggle and declines in sales. Due to the merger and declining sales, they'd be forced to file for Chapter 11. Due to this, the newly merged company would go up for sale. Leonard Riggio, who was a founder of Software Etc. and the largest shareholder of Barnes & Noble, would want to go after the company. He would go up against the other famous video game store during the time period, Electronics Boutique, in a bid battle. However, a bankruptcy judge would award Riggio the company as he promised to keep more stores open. One of the first things he would do would be to dissolve the overall NeoStar company. He would then focus on rebuilding Babbage's as he felt that it had more value. He would bring in several former executives from Software Etc., putting into place a new COO and CEO as he believed that strong leadership from the top would help reestablish this organization as a leader in the video game space. In 1999, they would launch the GameStop brand. The new store would initially launch as 30 different stores in strip malls, and they would enter the digital age through selling video games and accessories on their website, GameStop.com. They would begin to focus on the digital aspects of selling products and online promoting in every chance and every possibility they had. In October of 1999, Barnes & Noble would purchase Babbage's for $215 million. A special committee would be needed to evaluate the sale, as the deal between Babbage's and Barnes & Noble's meant that Riggio, the largest shareholder and chairman of Barnes & Noble, would become very wealthy from the sale. Many would say it was Riggio's end game to always have Barnes & Noble purchase Babbage's. Barnes & Noble already was gaining a new market share in the electronics space, and they wanted the acquisition of Babbage's to go out and help them further. They would then go out and acquire the company called Funko, another video game retail store which had Funkoland that sold video games and video game accessories. This purchase would be around $160 million. Now, owning Babbage's and Funkoland, they saw this as an opportunity to build out a brand new brand. They would then focus on becoming a whole video game company. They would also go out and purchase during this time Game Informer. With these three organizations under one umbrella, they decided to rename the company GameStop, launching as an IPO spinoff in 2002. Barnes & Noble would retain 67% of the company and have 95% of voting rights. The company would have its best year ever in 2003, posting $1.58 billion in sales with $63 million in profits. Every single quarter of that year was profitable, and they began expanding overseas. Barnes & Noble's ownership of GameStop would continue until 2004. GameStop continued to expand throughout the mid-2000s through the acquisition space. They would acquire Electronics Boutique, or EB Games, for $1.44 billion in 2005, essentially establishing themselves as a monopoly in the video game sale market. The goal of GameStop was to build beyond just being a video game company. However, this would also be their downfall. They lost their key focus, which then was not helped with market downturns and the COVID-19 crisis. Now it leads us to today, where Roaring Kitty is single-handedly trying to save the company with retail investors. What do you think about GameStop? Is it going to the moon? Thanks so much for watching Believable Truths.